Investing can feel complicated, like a puzzle with too many pieces. Many people feel overwhelmed and don't know where to begin, so they never start. But what if it were much simpler than you think? The truth is, you don't need to be a Wall Street genius or have a lot of money to start building wealth. All you need is a clear, simple plan to follow consistently over time. In this video, we're going to give you that exact plan. We'll break down how to start investing into just 3 simple, actionable steps that anyone can follow starting today. Let's get started with step 1. This isn't about risky stock picking or trying to time the market. It's about a proven, straightforward approach designed for long-term success and peace of mind. This is investing made easy for everyone. By the end of this short video, you will have a complete roadmap. You'll know exactly which accounts to open, what to invest in, and how to put your wealth building on autopilot for the future. Forget the confusing jargon and financial noise. Our goal is clarity and action. Think of this as your beginner's guide to taking control of your financial future in the simplest way possible. The single most important factor in investing success is simply getting started. The sooner you begin, the more time your money has to grow. So let's eliminate the confusion and take that first step. Are you ready to learn the 3 steps? The first is all about building your foundation. It's about choosing the right place to hold your investments, which is easier than it sounds. Step 1 is to open an investment account. This is simply a specialized account that allows you to buy and sell investments like stocks and funds. It's the container for your financial assets. Think of it like a bank account, but for investing. Instead of just holding cash, it holds your shares of companies. You can open one online in just a few minutes with a brokerage firm. There are 2 main types of accounts for beginners to consider. The first is a standard taxable brokerage account, which offers the most flexibility for your money. You can withdraw anytime. The second type is a retirement account, like a 401k through your employer or an IRA, which stands for Individual Retirement Arrangement. These accounts come with powerful tax advantages. If your employer offers a 401k with a matching contribution, that is often the best place to start. A company match is essentially free money, giving you an immediate return on your investment. If you don't have a workplace plan, or if you've already maximized your match, opening a Roth IRA is a fantastic option. It allows your investments and earnings to grow completely tax-free. Don't get stuck on this step. The most important thing is to just open one. You can find many reputable, low-cost online brokerages with a quick search. The process is simple and fast. So, to recap, step 1. Choose a brokerage and open an account. A Roth IRA is a great starting point for most beginners due to its tax benefits. Now, what do you actually buy? Step 2 is deciding what to invest in. This is where many beginners get paralyzed by choice. With thousands of stocks to choose from, where do you even begin? The answer is simple: don't choose. Instead of trying to pick individual winning stocks, the smartest strategy for most people is to buy the entire market. You can do this by investing in something called a low-cost index fund or an ETF. An index fund is a single investment that holds small pieces of many different companies. For example, an S&P 500 index fund holds shares in the 500 largest companies in the United States. This strategy provides instant diversification. If 1 or 2 companies in the fund perform poorly, it has very little impact on your overall investment because you own hundreds of others that are doing well. This is much safer than putting all your money into 1 or 2 individual stocks. If that single company fails, you could lose everything. Diversification is your key defense against risk. These funds also have extremely low fees, which is critical. High fees can eat away at your returns over time. Look for index funds or ETFs with an expense ratio of 0.1% or lower. Renowned investors like Warren Buffett have recommended low-cost index funds for the average person. It's a proven, passive strategy that has consistently performed well over the long term, beating most active managers. So, for step 2, keep it simple. Choose a broad market, low-cost index fund or ETF. This one decision gives you diversification and a solid core for your portfolio. Now for the final crucial step. Step 3 is the secret ingredient to long-term success: automation. The best way to build wealth is to make it effortless and consistent, removing your own emotions and forgetfulness from the equation. Set up an automatic transfer from your bank account to your investment account every single month, or even every payday. This is known as paying yourself first, and it ensures you always invest. Once the money is in your brokerage account, set up an automatic investment into your chosen index fund. Most platforms allow you to schedule recurring purchases of a specific fund or ETF. This strategy is called dollar cost averaging. By investing a fixed amount regularly, you buy more shares when the price is low and fewer shares when the price is high. It smooths out your purchase price. Automation helps you overcome the two biggest investing mistakes: fear and greed. When the market drops, you won't panic sell. Your system will just continue to buy. When it's high, you won't get greedy. The amount you automate doesn't have to be large. Even investing a small, consistent amount can grow into a significant sum over time thanks to the power of compounding. Start with what you can afford. Set it, and then forget it. Let your automated system do the hard work for you. Check in on your account once or twice a year, but resist the urge to tinker with it based on news headlines. So, step 3 is to automate your savings and your investments. This simple act builds discipline and consistency, which are the true keys to growing your wealth over the long term. So, there you have it, the simple 3-step plan for any beginner to start investing. Let's do a quick recap of the entire strategy so you can get started with confidence right after this video. First, you build your foundation by opening the right account. For most beginners, starting with a workplace 401k to get the company match or a Roth IRA for tax-free growth is the perfect choice. Remember, the goal here is to just get started. Don't spend weeks researching the perfect brokerage. Choose any major, reputable, low-cost firm, and you will be in great shape. Action is what matters. Second, you decide what to buy. And the simplest, most effective answer is a broad market, low-cost index fund, or ETF. This gives you instant diversification without having to pick individual stocks. This single investment allows you to participate in the growth of the entire economy. It's a passive, proven strategy that minimizes risk and reduces the fees that can drag down your long-term returns. And third, you automate everything. Set up recurring transfers and investments to make your wealth building effortless and consistent. This removes emotion and ensures you stick with the plan, no matter what. This set it and forget it approach is the most powerful part of the plan. It turns investing from a stressful task into a simple background habit, like a utility bill that builds your wealth. That's the entire plan. Open an account, buy a total market index fund, and automate your contributions. It's truly that straightforward. Now let's talk about the magic that happens when you follow this plan. Why is starting early and being consistent so important? The answer lies in a powerful concept called compound growth. It's what Albert Einstein supposedly called the 8th wonder of the world. Compounding is simply your investment earnings generating their own earnings. Your money starts working for you, and then the money that money makes also starts working for you. It creates a snowball effect. In the beginning, the growth seems slow. Your small investments make tiny returns. It can feel like you're not making much progress, which is why many people give up too early, but patience is key. Over time, as your account balance grows, the amount you earn from compounding starts to accelerate. After 10, 20, and 30 years, the growth becomes exponential. The curve sweeps dramatically upward. Let's look at a simple example. If you invest just $100 a month, after 30 years with an average return, you could have over $100,000. The majority of that final amount would be from growth, not your contributions. This is why your most valuable asset as an investor is time. The longer your money has to compound, the more dramatic the results will be. It's why starting now is more important than starting with a lot. Every day you wait to invest is a day you're giving up the potential for compound growth to work its magic. The simple, automated plan we've outlined is designed to maximize this effect over your lifetime. By following this 3-step plan, you put this powerful force to work for you. You don't need to be a genius. You just need to be consistent and let time do the heavy lifting. Now, you might be thinking, this sounds good, but what if the market crashes right after I invest? This is a common and valid fear, but our strategy is designed to handle it. Remember dollar cost averaging? When the market goes down, your automated investment simply buys more shares at a lower price. You're essentially buying stocks while they are on sale. Historically, the stock market has always recovered from every single downturn and gone on to reach new highs. A long-term perspective is crucial. Market dips are a feature, not a bug, of the system. Another common thought is, I don't have enough money to invest. The truth is, you don't need much. Many brokerages have no minimums, and you can buy fractional shares for just a few dollars. The habit of investing is far more important than the amount when you're starting out. Investing just $20 per month is infinitely better than investing nothing. Start small and increase it over time. Don't let the quest for the perfect investment stop you from starting with a good enough one. A simple, total market index fund is more than good enough. It's a fantastic choice for most investors. The biggest risk isn't investing. It's not investing at all. Due to inflation, the cash you keep in a savings account is slowly losing its purchasing power every single year. By following our simple 3-step plan, you're taking control. You're building a system that overcomes fear, starts small, and protects you from the wealth-destroying effects of inflation over time. Investing doesn't have to be a source of stress or confusion. By breaking it down into 3 simple steps, you can transform it from an intimidating challenge into an achievable goal. Let's say it one last time. Step 1. Open an investment account, like a Roth IRA. Step 2. Buy a low-cost, diversified index fund. Step 3. Automate your contributions every single month. This plan is your path to building long-term wealth. It's a reliable and stress-free strategy that puts the power of the market and compound growth on your side. You are now ready to begin. Your challenge today is not to become an expert overnight. It's simply to take the very first step. Your only goal for today should be to open your investment account. You can do it in 15 minutes. Don't wait for the perfect time to start. The perfect time is always now. Future. You will be incredibly grateful that you started today, even if it was with a small amount. If you found this simple guide helpful, please give the video a like to help others find it, and consider subscribing for more straightforward finance tips that are designed for beginners. Share this video with a friend or family member who you think could benefit from a clear, simple plan to start investing. Helping others on their financial journey is a powerful gift. Thank you for watching. You now have the knowledge you need. The only thing left to do is take action. Go open that account and start your journey to financial independence today.